This is your LMAX exchange technical update for Wednesday, November 16th, 2016. Euro dollar. So the euro is broken down this week to a fresh 2016 low, and this sets the stage for the next major downside extension towards critical longer-term support in the form of the 2015 low at 104.63. At this point, look for any rallies to be very well capped ahead of 110. Sterling dollar. So cable remains confined to a downtrend, but there is a bit of a correction underway here, which does open scope for a potential retest of previous support turn resistance in the 128 area. However, overall the downtrend does remain intact, and while the market holds below 128, there's risk for another downside extension back towards a retest of those recent 31-year lows in the 120 area. Dollar yen. So dollar yen has seen a major correction higher, and at this point it could be turning into a more significant base. We have seen a fresh upside extension that now exposes upside towards next key medium term resistance at 111.45, and at this point any setback should ideally be very well supported ahead of the 104 handle. Only back below 103 now would compromise this constructive outlook. Euro Swiss. So despite a recovery in Euro Swiss and Tuesday trade, the market remains confined to what is now looking to be more of a downtrend, exposing a retest of the 2016 base at 106.24. At this point, look for any rallies to be well capped ahead of 108, with only a break back above that level to really put the pressure potentially on the top side. Aussie dollar. So Aussie has seen rejections continuously above 77, and this latest topside failure opens the door for a possibility of the market retesting critical support at 74.21. At this point, look for any rallies to be very well capped ahead of 77. Dollar CAD. So dollar CAD has been highly constructive, with the market pushing higher to fresh multi-month highs just up above 135. But at this point, the market could be ready to stall out and see a bit of a correction before it looks to head higher. But ultimately, any setback should be very well supported in favor of that next major upside extension towards next key psychological barriers at 140. Kiwi dollar. So Kiwi has been topping out off the 2016 high, which stalled just shy of 75, and there is risk now for an acceleration on the establishment below critical psychological barriers here at 70. At this point, look for any rallies to be very well capped ahead of 73. SPX 500. So the S&P 500 saw a sharp rebound in the previous week after the market had looked like it was about to break down on the close below that September base at 2108. At this point, look for the market to potentially still be carving a major top, though we would need to see a breakback below 2100 to strengthen this outlook and accelerate declines. Gold. So gold has seen some sharp setbacks over the past several sessions down towards 1200, but ultimately here the market remains very well supported into the 1200 area and should be looking to put in another higher low in favor of the next major upside extension back towards the 2016 high at 1375. Really only the establishment here back below 1200 would compromise the constructive outlook for gold. That's all for now.